Welcome everyone to today's CFDA professional development conversation on transforming the fashion industry through equal access to capital. I'm Sasha Brown, the Director of Professional Development.
Hi, and I'm Ebony Wiggins, Consulting Director of Talent Relations and Equity Initiatives for the CFDA Impact Program. Thank you to those who joined session 1, where a panel of experts introduced funding disparities for minority-owned businesses, and welcome to those who are joining for the first time. Today, we'll be discussing the intricacies of raising capital.
And once again, leading this conversation for us is Felita Harris. Felita has served in senior positions, including those of Chief Strategy and Revenue Officer at Harlem's Fashion Row, Icon 360, Executive Vice President of Alexander Wang, and Senior Vice President of Donna Karan Collection. And I want to remind all of our guests who are either new or joining or joined last time that we will be holding Q&A at the end of the hour. Please feel free to submit any question for our panelists, including Felita, in the Q&A tab, and we will get to as many as we can. You are also welcome to submit your questions anonymously if you feel more comfortable doing it that way. And without further ado, Felita, I will pass it over to you.
Thank you, Sasha. And thank you all for joining the second webinar. We appreciate the CFDA for organizing this important discussion. Today, we have 4 panelists joining us who are founders, entrepreneurs, and investors. They will address the complexities of raising capital, traditional and non-traditional ways to think about fundraising, and resources that are available to support and aid minority-owned businesses. Welcome, panelists. We are thrilled to chat with you today. Let's start with allowing each of you to introduce yourselves and describe your organization. We'll start with Busayo.
Hi, Felita. Thank you so much, everyone, for joining. I'm Busayo Lupono. I'm the founder and creative director of Busayo. I'm also an attorney, and I bootstrap Busayo from pop-ups, doing pop-ups throughout the country, to currently being sold at several major department stores throughout the country. And I finally was able to quit my day job April 1st of this year. So I'm so excited to be here to have this awesome conversation.
Hi, I'm Ibarra. I am the founder and head of impact at Lula. We work with returning citizens to provide sustainable careers in the fashion industry for our luxury handbag brand. I'm also an assistant professor at Parsons School of Design and an executive consultant for sustainability and equity, currently at Adidas.
Christopher Chu with Royce Group. I'm an investor advisor, a former entrepreneur. Thank you for having me today, and excited to talk a little bit more about how to raise capital and what that really means.
But I think we're waiting on Lorene.
You have to unmute me. Thank you. I was on mute. So hi, everyone. I'm very pleased to be on that panel today. My name is Lorene Possialton. I'm based in Côte d'Ivoire, between Paris and also Abidjan. I'm the founder and CEO of Birimian Ventures, which is a financial holding company, not a private equity fund. This is very important. I think we'll come back to this during the panel and the webinar. So a financial operating company dedicated to the sustainable development of African heritage brands. We are based on the continent, and our objective is really to work on 3 pillars: capacity building, incubation, acceleration, access to finance. So I'm pleased to discuss it with you today. Thank you.
Thank you all for joining us. Chris, the first question is for you. Our team received a number of questions regarding what an investor actually is and how to begin the conversation. Will you give us your definition of an investor and the investment life cycle?
Completely. Yeah, I mean, I think in the simplest form, an investor is somebody who will become a stakeholder in your organization, right? And I think from a motivations perspective, to be super clear, that investor is likely here to make money, right? Or at least have some financial return on their investment. Obviously, you have a number of impact investors who are also interested in other parts of the benefits of investing. But for the most part, an investor is somebody looking for return, right? And as you talked about, I think life cycle is an important part. As you think about your brand or your company, where you are in your life cycle also needs to match up with where an investor is, right? And what I mean by that is if you're a very early stage team, pre-revenue or small amounts of revenue, going after a fund or an investor who typically invests $50 or $100 million is probably not the place to start. So, thinking about life cycle throughout your journey as an entrepreneur, I think you need to ask yourself, do I want to raise capital? Why do I want to raise capital? And who is that right partner at my particular stage, right? It can be, my experience is more in the venture capital space. And that's a very particular niche of capital raising, right? And there are different vehicles. There's private equity, there are large funds, there are angel investors, and they all occupy different spaces.
Lorene, you are enabling African brands to access capital, drive sales, gain mentorship, and set up an operational ecosystem to scale their businesses. What inspired you to solve this issue, and why is seeking an investment exponentially more challenging for minority founders?
No, thank you very much. And most importantly, thank you for Christopher address regarding what's an investor, because I think we are operating in an industry, where designers are used to have, I would say, free money. And when it comes to investing into the fashion ecosystem, it's not about charity. It's about creating sustainable businesses. So what did inspire me, the creation of Biriman Ventures, to be honest with you, it's one anecdote. I was walking down Avenue Montaigne, and I passed by one Dior store, and I saw the cruise collection of Dior made with a collective of African designers. And it was actually made in Côte d'Ivoire, made in Africa. So Dior was selling like a collection made with a collective of designers out of the continent. So I was like, okay, the world is now ready to feel and breathe what we have as most precious, our African designers. Now, why do those designers incapable of selling their own collection and having their own stores at Avenue Montaigne? And what does it take to take them there? So this is really the purpose and objective of Biriman, being able and capable of creating from the onset sustainable brands. The issue is not everyone will succeed, because the reality is this is tough. Like creating a sustainable brand is very difficult. Investing in a brand beyond minority-owned and Black businesses is something that is very, very difficult. When you take all the big groups, LVMH, Kering, some of their brands took a lot of time to be profitable. So this is where it's really important that as an industry, we understand that the depth of the matter is really to work on the foundation, having a structure. So being able to transform from a designer to a creative entrepreneurs. And some of them all can't be creative entrepreneurs. They're good at being artistic directors and to design. So then they need to find the right set of complementarity into their teams to be able to grow their businesses. But until they get to a certain stage, they can't do this. So this is why we really try to bring that kind of ecosystem to make sure that where there is a lack of potential, when there is a potential, but there is a lack of capacity, we're here to fill that gap and make sure that we go from a designer to a small brand to an established brand and then to a label. And this will take time.
Fantastic. And you really touched on something with, the foundation. I do have a follow-up question, and that's regarding bias with investing. Have you noticed that fashion brands have or are encountering more bias in their process to seek investment?
Absolutely, absolutely. And I will even say more than African brands are creating bias, but in the wrong way. Today, there is a strong buzz around African creativity. Everybody is looking at the African brand, Black-owned brands because of Black Lives Matters and everything. But they see it, I would say, from a curiosity standpoint. You know, it's like a kind of folklore. It's really interesting. You know, it's coming out from Africa. But when it's so all the initiatives are really dedicated to PR and tends to sometimes being superficial. But when it comes to actually strike an investment into those brands, they are limited investors because they all say the same thing. We've been burned investing into the fashion ecosystem. So why are you guys are going to do things differently? So they're biased, first of all, because they think that the continent is not ready to have like established brands. They're biased because there is, I think, a kind of prejudice, which is say that Black-owned businesses can't be as successful as white-owned businesses. And the third element, when you look at our industry, most of African heritage brands are led by women. So taking an investor to invest in the fashion industry and in women, now you accumulate two biases that are just, you know, impossible to solve. So of course, it's tough to raise fund as a designer, whoever is African Black-owned and inspired from an African heritage. This is very difficult. And at our level, even the women, we experience some difficulties to raise funds. So it's a matter of, you know, being consistent with an objective, a mission, and an end goal.
So Busayo and Ibada, why do brands seek investment as opposed to obtaining funds from friends and family or continuing to bootstrap their companies?
I'm going to answer that question in a different way, if you don't mind. I think each one of these avenues is a completely legitimate, and in fact, I think something Chris said at the beginning is, where are you in your business, right? Like, what are you trying to build? I think was the theme from the first session, right? When Suchin said, if you are seeking venture capital, if you're trying to build a rocket ship, then sure, because you need jet fuel to power it. But if you're trying to build a small, medium-sized brand, right? And like sort of along a natural life cycle, in fact, I think these other avenues of investment to me seem much more legitimate. And in fact, you actually, based on what Chris said, you kind of need to go through the cycle to get to the point where you are now going to seek VC funding, right? Like you have to walk before you can like fly, right? So in terms of my business, we really did bootstrap. I would say I was the source of income for the first 8 years of the business. And in fact, it was just through working. You know, when we were talking about this panel, I said, I'm not sure people are going to like what I have to say, because the way I built Busayo was that I got a job. I was really lucky to be trained as a lawyer. And again, it was not a fancy legal job. I worked for the city of New York in economic development, and I worked in a cubicle in a bullpen and worked till April 1st of this year. And that is how I built Busayo. We did pop-ups throughout the country. We started with pop-ups in New York City. I flew to Miami and did pop-ups. So of course we had operational cash flow from sales and our D2C business, and also from the pop-ups. There is no family money. There is no magical, you know, daddy in the sky or anywhere giving me money. It was really just working really, really hard at my day job and pulling all the money that Busayo made back into the business. Now, in the last 2 years, we've been lucky enough to get grants, and we can talk about that. And also a little bit of PayPal financing when I was thinking about this session today, and use some of that to get to where we are. But really, Busayo was bootstrapped from, you know, all these pop-ups and operational cash flow. And we are at Neiman Marcus, we are at Saks. And so we were able to do those things, I think, with the help of a lot of people, right? We didn't get here by ourselves. And I think now I'm beginning to think about VC funding, because we do need to grow exponentially. But I'm not sure any VC would have talked to me in the last 10 years, because we were not at that point at all in terms of the returns that they're looking for in investment properties, or in terms of the returns they're looking for in their portfolio. We just were not there to give those types of returns. I'm not sure we're still there now, but I think we're closer than we certainly were over the life cycle of the business for the last 10 years.
Great. Ibada?
Yeah, I'm going to respond to that a little bit differently as well, because I think we all sort of understand sort of this vantage point of
Mhm.
it really matters where you are as a founder, as a designer, right, with your business. So with that being understood, I think that, it's really important to think about, one, what your strengths are, to go back a little bit of what we were talking about earlier, right? Like, I am an entrepreneur, and in fact, my expertise is social entrepreneurship. And I manage corporate social responsibility in the fashion industry. I, started a handbag business with a social impact mission, having managed corporate social responsibility for a top handbag brand, right, at Kate Spade. And so I had to really think about what my strengths were as I was building my company. And so it was realistic for me to apply to accelerators or, competitions. Like we won the Girl Boss Prize in our second year pre-launch of starting the company. But that was because that I knew that was my area of strength, right? My area of strength wasn't necessarily creative direction or artistic direction. I had ideas and I had concepts that I was really excited about, right? But I leaned on other people who I'd met in my day job, right? To go back to what Busayo was saying, to really build out the vision that I had. And so I think it's really important to sort of assess that and sort of, I think, work within sort of the reality of your particular conditions, circumstances, and of course, like, resources matter and access to those resources matter, right? And I think equity is a really important part of that, and of course what we're here to discuss. But I think it's important to know within what context you are seeking access to capital, right? And that actually is suitable for not only the brand that you're seeking to build, but your skill set. So for me, I think it's, realistic to say, okay, I'm going to sort of fund this, certain aspects of this through personal finances, also through maybe winning prizes or grants, right? Some of the things that Busayo spoke about, but really leading with like a strategic vision and a business vision. And as I said in the first session, it was a really great learning experience for me in the second year starting Lula. I'm now going into the fourth year, to go out to Silicon Valley and to meet with VCs and to really understand and take away learning experiences that, like, that's not the stage at where we are now, but I understand what stage we need to get to seek out that kind of funding, right? So again, just reinforcing some of the things that she mentioned.
Thank you. And Chris and Lorraine, I mean, this makes sense intellectually, and it appears that everyone is on the same page. But I have to say, it is confusing. So can you walk through what VCs or investors are looking for in a fashion brand, specifics?
Yeah, I mean, I like the analogy. I think the analogy of jet fuel is an important one, right? It really, philosophically, investors are asking themselves, how do we find high growth businesses, exponential growth businesses? In my mind, I think about it as, how do I invest $1 million to solve $1 billion problem? And that has to be the mindset going in, that you really are looking for a 10x or a 100x return on the business, on the opportunity that you're going after. I think from a critical risk perspective, and I think Lorraine talked to it as well, I think as you're presenting to investors, you're not just presenting a creative vision. And I think that's some of the bias in fashion and retail and lifestyle, is that creative vision is one thing, and it's obviously critically important to product, but you also have to have business vision, which follows on to a pro forma and cost of goods, and really being able to explain and understand your business as a unit economic business, as well as a creative business, right? And sometimes that skill set isn't the same person, right? So that might also be building the team around you that can complement and be ready again for the amount of funding. So, I think the jargon, or at least the term in investment, is use of proceeds, right? How are you going to deploy the dollars that I give you? I gave you $1 million. What are you going to do with it? Being able to carefully and meaningfully explain how you're going to use the money to really grow your business, right? And candidly, I think jokingly, the answer can't be marketing, right? It can't just be marketing. That can't always be the answer to say, okay, we're just going to throw $1 million into the marketing machine and hope it turns around. You have to be able to explain, why do you have marketing leverage, right? Why is your business going to extract more value out of the marketing you do? Why do you have a core customer? How are you going to be operationally efficient? How are you going to continue to scale? I think there's a lot to talk about here, and obviously I'll let Lorraine speak more to it, but that's sort of my take.
I totally concur to Chris' points. Totally. And I will add up to this. The first thing is, as investors to the fashion ecosystem, we don't really judge creativity. And if we select and pick a brand, it's because by definition, that brand is creative. Now we need to make the difference between a creative brand and a commercial brand. Some brands are really creative, but guess what? Their community is really small because their creativity is particular to a certain dimension, inspiration, heritage. So the second thing we also kind of look at is the community behind the brand. How big is that community? Because we can translate into potential consumers. And what's the positioning of the brand? So that's the third thing, a brand platform. How strong is a brand platform to be developed and to be translated into sustainable collections? Because by definition, the fashion ecosystem and industry is like limited in terms of time. You can be successful for 1, 2, 3 season collection, but it's difficult to maintain, the same growth and upsides like on a steady basis. So we really need to understand what's the driver behind the growth and the sales. Sometimes, and I will take you an example, when we are working with some brands, we're like, okay, what's your USP? What's your unique selling proposal? What's your DNA? What makes you different? Some of them tell us, we're here to dress the powerful African women. And we're like, this is not a USP, because whoever comes in from Nigeria, from South Africa can say the same thing, right? So it's really understanding what deeply roots the brand into its identity, DNA that can be replicated into perfumes, ready to wear, accessories and everything. At the end of the day, what makes an investment successful is also the capacity for a brand to be multi-product. When you look at, for example, Dior, most of the sales of Dior today are coming from the accessories. The same from Chanel, the same from Louis Vuitton. The ready-to-wear is a small component of the revenues. Why? Because it's easier to sell a bag, a belt than a dress. So in the end, we also look at the capacity of the brand to develop outside the core product line and the capacity of the designer to support that growth. Some of the designers can do it. Some of them won't and don't want, because that's not what they have as an ambition and vision for the brand. And I will conclude also with that very important point. As investors, as Viridian Ventures is concerned, we've pretty much quickly concluded to the fact that we need to be flexible in terms of type of instrument for investment, because not all designers want to share their equity with a third party. It takes time to build trust, confidence, to do those kind of alliances. And most importantly, if we go into equity, it's really important that the designer remains in control as the founder. So we are always minority when it comes to investing in equity. But in terms of flexibility, we can also invest in convertible and also debt instrument to support the, would say, revenue, collection financing needs and working capital requirement. So I think that in that particular industry, the key to success is to be flexible, understand the needs of the designer, coming with the right sets of instruments, depending on its investor readiness and status of maturity. There is no one size fits all solution for all of them.
Powerful. Okay, I know we're going to get this question, so I'm going to ask, how do brands start to prepare for this process?
Sorry, go ahead, Chris. No, please go ahead.
No, I'll just say quickly, I mean, I think it starts with that preparation of, again, asking what's the right vehicle? What am I doing? What am I trying to accomplish? Am I looking for capital for short term? Do I need to finance inventory? Do I need to finance larger growth? I think it starts there, and it has to be a sort of pro forma, a long-term looking sort of financial understanding of your business. Sorry.
No, I think, I think what I was going to say is that for me, I'm not trying to build like $100 billion business, right? Like that's not, I'm looking for like a small size, $30 to $50 million, small size business. And I'm perfectly happy with that, right? So for me, in terms of financing, what I'm really looking at is, increasingly probably some factoring, which is not, ideal, but probably some debt financing in terms of looking at like, or PO financing as we, or just purchase order financing so that we can expand. But in terms of how to prepare, I mean, one thing I've noticed is that the conversations I'm having now certainly are different than the conversations I was able to have 2 or 3 years ago. And again, you begin to, meet more. At the end of the day, I still think fundamentally relationships, as much as we don't want to, say, are a really important part of all of this. Last year, one of my mentors, invites me to a dinner, and next thing you know, I'm sitting next to somebody who's like, "Oh, I'm a VC and I'm investing in companies, and let's have coffee tomorrow." And I was like, "Oh, so this is how this works, right?" Like, and I was a lawyer for a very long time and worked in very sort of sophisticated financial institutions, but that kind of ease, right? Once you begin to demonstrate a certain time of history, I think people respond to you a certain way, and doors open or crack open that perhaps were like shut firmly before. But we still, we're still at the very, very early stages of this conversation. But certainly, I think for me, equity is extremely important. I'm not really interested in handing over any piece of Busayo at the moment. And so to the extent that I can do like debt financing, if necessary, that's really the type of financing that I would be interested in. And of course, grants.
Yeah, and I think it's also important to consider all of those things, or that to understand that those things are all being considered with a really strong understanding of who your customer is, right? And like what your brand represents and who that will resonate with. Just to go like take a step back, just because I know that like a lot of the times sharing this advice or thinking about these processes can feel intimidating when those things are also unclear. So it's really important, I think, to think about and to have a really strong brand identity and vision, right? That you are sort of following like a roadmap, right? As you're also thinking about like financial tools and investment, et cetera. It's not happening in a vacuum.
Right. I
I
wanted to say one thing about the equity concern, because it comes up a lot. Brands are very concerned about seeking an investment because they, for good reason, want to hold on, right, to ownership. So Laureen and Chris, can you talk to us about equity, positive and negative, and the idea of valuation around that? I know it's complex, but let's try to give as much information as we can.
I think it's a very, very important point, because an equity investment, to me, it's actually a strategic alliance. You have to see it as a marriage or as a wedding with a limited time. You know when you get married, you know when you have to divorce, to take, the example. The reality is it's a contract with an investor. The investor comes with an investment at a certain valuation. I'll come back to that point later on. And the brand and the designer as founder knows that by a certain time and point, the investor will have to exit, and that you will need to make the condition in terms of performances, in terms of revenues, in terms of positioning, to be able to create that exit. So this is where it's a very complicated discussion. And this is where I think that part of our industry, and that's the reason why I was mentioning that we're not a fund, but we're an operational holding investment company, because part of our industry, at least on the continent, is not ready to go through that journey. The exit process is a very complicated process, because what you've been creating, structuring for a certain time might be defeated or disrupted by the exit. And you need to make sure that whoever comes in has the same capabilities and has the same vision as you as a creator, as a founder, and as a creative director. So the equity investment works for mature brands, mature companies, which have achieved a certain level of size in terms of revenues and who have achieved a certain level of maturity in terms of investor readiness and the way they drive their business. So your second question, valuation. Very complicated topic too, because it's a question where the investor needs to maximize its shareholding and minimize the valuation. The founder and creative director is convinced that he has the best brand ever on earth and would like to maximize the valuation based on sales, like revenue generation and EBITDA. The way we as Berinian deal with that, we use an hybrid instrument, which is called a convertible, because we don't want to be fighting in the valuation until we can demonstrate the value addition that we bring as an investor, and until we have seen the capacity of the designer to create value for the long term. So it's always a way to defer the discussion on valuation. And then we have two options. After a certain time frame, which is called the conversion window, the designer as a creative director or founder of the company can either decide, we can decide together that there is a strong fit, a strong alliance, that we want to be together, like hand in hand in the long run, invest together, and then we convert into equity, or there is not that great fit on both sides, and then it's debt. So there is a conversion into a debt instrument with a payback and amortization scheme to be followed by the brand. And I think it's a great way to deal with that equity issue, which sometimes can be problematic for emerging brands.
I think
Chris.
I think everything she said is spot on. I think, being flexible around vehicles. I think as you think about equity, right, I think the fear is always about ownership and control, right? And I think the analogy of a marriage or a partnership is the right one, right? Where if you are going to give up equity, you want to be able to, you want to have a trust in your partner. I think, in specific cases, I do think that on the other side, I think people get maybe overly concerned about, like, is it 51% or is it 49%? And I think that in some ways is dramatized because of movies and otherwise. I think it's again, this idea of partnership and co-ownership, right? Whether I own 20%, 15%, or 40%, or 55% or majority in private equity instances, it's about sort of who feels ownership for this company. And I think that dynamic translates to the board as well. And again, those to the point around maturity, if you're mature enough to have a constructed board, then you're probably mature enough to have this conversation. But if you haven't started to construct a board and started to actually have corporate governance in that way, and you are I would say just, and I don't mean just in a demeaning way, but you are just a creative brand and not a business brand, then that's some of the challenge, right? I think the second question around valuation is a great one, and put it better than I would. I think that's the tension, right? The tension is founders want to maximize valuation, investors want to minimize valuation, and that's an inherent tension. I don't think you're going to get beyond. But I think valuation functions as a way to benchmark, what do we think this brand is worth, right? If we had to sell it today, what do we think it's truly valued at? And I think being honest with yourself, both as a founder and an investor, to say there are a lot of risks, right? An early stage brand has more risk than I think even revenue can attribute, right? I think you can always use multiples of revenue to say, oh, it's, it'll trade at 3x revenue. But there's a huge operational risk. We're not profitable. There's a risk profile around valuation that I think is important to think about, especially when you're early, right? As you get later and later, you're not talking about risk profile anymore. You are talking about revenue and EBITDA, right? Where you're talking about your ability to create cash flow, right? And then you can be valued on your ability to generate cash flow. That's a mature business, right? 30, 50, 100, $200 million businesses that can trade or ultimately be valued pretty linearly against their their cash flow generation.
Right. We are so focused on the financial investment. I think when we talk about, raising capital for the business, what other components, and this is for the panel, what other components should brands be looking for in this marriage or partnership beyond the financing?
Yeah. If I may start with that answer, because this is the way we've built really our business. There is no money without any kind of value. And what we always say to brands and designers is that you should consider us not as an investor, but as a partner. So you should see the value we bring on top of the money, because it's not a question of access to finance only. Because if the designer, if the brand as a company is not ready, as Christopher was saying, to deploy that capital, then both the investor and the designer are at risk. And then the chances that the investor will have to feel again, top again its investment, invest again to support and sustain the development of the brand are really high. The key thing is behind us as investors are other investors. So we have a fiduciary duty. And so we are limited in what we can do. And this is the most difficult thing to explain to designers, because we are accountable for the funds and money we've raised. So in the end, what is really critical is make sure that there is the infrastructure ecosystem around the brand. So this is the reason why, for instance, we have created an accelerator program with the French Fashion Institute, so EFM, through which we are supporting, and I would say safeguarding, mitigating the risk of our investments with those experts who are acting as advisors to the brand and to us on the different kind of elevation and development strategy. So this is what the designers and the brands themselves need to look for, that kind of capacity building, strengthening, governance, the fact that investors create structure for them so that they're not at risk when it comes to deploying the money they receive. So it's money with value, which is really important.
Anyone else?
Yeah, I mean, I think about, I'm a big participant in many accelerators, right? So I think about something like Raise, which, certainly I've been the recipient of 2 Raise grants. But in addition to that, it's really been an invaluable support in terms of just, the list is endless. I could probably talk about it for 15, 20 minutes. But I think Raise Fashion has been probably the most significant driver of growth for Busayo by far. I'm part of it's called Next 1B, which is from McKinsey, there's no cash actually attached to it, but it's an accelerator for Black founders, really trying to develop the next unicorns. And it's just an amazing group of 40 founders where we meet every week. And it's really been an incredible learning opportunity. And there is no cash attached to that. But in terms of really sophisticated and also, of course, having access to McKinsey level of resources, which for a business like Busayo is amazing. The Saks Accelerator that I was a participant in as well, which just gave us access to learn from so many amazing fashion designers. So especially for people that maybe are kind of earlier in the stage of growth for their business, I'm hoping that this conversation doesn't freak you out. I would say, every grant I literally apply, it's also its own job, right? I apply for the grants, I apply for the accelerator, piecing together 5,000 here, 10,000 here. I know it sounds hard in addition to all the things that you have to do to develop your business, but I think it's really, really important to, I apply and I forgot about it. Black Ambition Prize, I applied, I didn't get it. I put it out and I applied for the next one. You just keep it moving. And so I feel like this has been the easiest time. And I don't use that word lightly, to have a business and to be an entrepreneur, to be a Black entrepreneur in this country in my entire 10 years. I believe I don't think there's been these many opportunities, this many attention being paid to how do we actually create fundamental shifts in economic capacity among Black people. And this window of opportunity, which I don't think will be here forever, I really hope that people take advantage of, whether you're a Black business or not. I imagine there are people on the calls who are not Black business owners. There's so much opportunities if you're a woman founder that, are you applying for a grant? Are you are you applying for the incubator? Are you applying for for all those things. And I know, because at the end of the day, if you're an early stage business, it is pretty impossible to get venture capital. So like, that's just not going to be an option for you. So you have to figure out how you're going to make this work. You know, for example, PayPal, I didn't pay attention to it for the longest time, but you could borrow up to 20,000. When I got my first purchase order and was like, how am I going to pay for this? I could borrow with no interest from PayPal against future receipts from our D2C business. And that's what I did in addition to the grants that I'd received to pay for our first production. So there's money available now than there's ever been before. It's about being creative. It's about being aggressive. And then you have to work really hard. And yeah. Okay, I'm done.
No, that was amazing. And Tabata, I know you have more to add. And then I have one last question before we open for questions.
Yeah, I mean, I would just want to echo so much of what Busayo said, and also just to summarize kind of my thoughts, I think that it's equally as important to take advantage of what's accessible to you. And again, thinking about your particular skill set, where you want your business to go in what direction, as it is for the industry to also recognize that, like, as a fashion industry, there is bias, right, against sort of like founders and entrepreneurs. So like, what ways can brands, whether that's like the philanthropic arms of some of the larger, conglomerate brands, or, so many of these companies have foundations, right? And there are opportunities there. So, I've also sought out many of those opportunities through accelerators or grants for women founders or for Black-owned businesses. So I think that it is definitely, and I have a whole spreadsheet, and I even on a timeline, like every year I know like what the deadlines are, and if I don't get it that year, I'm applying to it the next year. So it's not, you have to be persistent, you have to be aggressive to some degree, right, in terms of like your work ethic and like getting yourself through the door. But I also think like relationship building is really important, which is like why these types of sessions are so great, right? Like really using the people in the room to advance the work that you're doing. And then just like sort of knowing where you want to go. I love like what Busayo said earlier about, wanting to be like a $30 to $50 million small business. And from day one, my pitch was like, we are the next $1 billion handbag company. And I just like felt very confident about that, and knew that I had to build a business model also that supported that. Right. Mm-hmm. And so I think it's also about recognizing like there's a lot of substance, and you have to be able to identify like the structures and the systems that will support your vision. It's not just about like having a pipe dream and banging your head against the wall and going like, why isn't this working? There's, strategy and management tactics that are really required. And so if you don't have those skills and you're the creative, finding someone who is, and because I sort of sit more on that side, I teach strategic design and management at Parsons. That's what I do. That was a really like a place of comfort for me. But I think, creatives who really are wanting to indulge in that creative vision, and maybe are especially like high-end products, right? Or ready to wear even, just because like accessories are sometimes easier to sell or get investment for. Then just, don't compromise your vision if that's what's most important to you. Like, be a small business, you don't have to go after VC, or, as Lorraine said earlier, the brands that are in these, portfolios that are like these larger portfolio of brands like LVMH or Kering, like these grew over decades and even centuries. So like, there's no reason to believe or to feel pressure that you need to create a brand overnight and that it will in some way be comparable to that. It's not even realistic.
Yeah, I think it's a very important point that I would like to echo, because I think the most challenging thing is that we are in an industry which is driven by the image, the surface, social networks, the number of likes, the number, so sometimes you can see beautiful Instagram, shoots and campaign and everything, and behind the scene, there is nothing, right? The brand is not capable of delivering. The brand is not capable of, ordering like a Zalando order or something. This is where we all need to work on credibility. And building a brand takes a lot of time, And this is where we also need to take a step back from social network, from that pressure, to have beautiful marketing campaign and to invest a lot, in those images, shoots, everything, and really make sure that the brand has at least some funding in terms of working capital to sustain a year, to produce, to deliver some collection, maybe have a smaller marketing budget, but making sure that you can, deliver on time, have strong relationship with the wholesalers, and develop your distribution strategy accordingly. Like building a DNA takes a lot of time. No luxury maison or houses was built overnight, and this is not going to change for us. So this is where we all need to sit around the table and make sure that we work into the same direction, which is creating accountability, sorry, pardon my French, but also credibility for the whole industry, because this is what this is about: time, credibility, building structure, and sustainable businesses.
Perfect. I can hear my ears ringing from the chat. So I'm going to turn it over to Sasha for Q&A. I do want to say there's a third session. Stay the course. Get the information so that you too can raise financial resources for your business. Sasha, I'll turn it over to you.
Thank you so much, Valida. Well, the question we got the most throughout the conversation, and you all did touch on it, but is, where do I find these investors and how is it best for me to connect to them? It's a big question.
I think, again, it depends on what kind of investor, right? I think that's a core question. Are you looking for pre-seed or angel investors? Then there are a number of angel networks, either around an affinity, around a university, around a city, around a diversity type. There are a number of groups and angel groups that associate. I think at a more institutional level, right, when you're thinking about seed rounds or Series A or other larger rounds of funding, that's some of the benefit of accelerators, right? These accelerators do feed larger funds and feed investment. And there's some, benefit to even just like we said, networking, of going places, meeting people, and getting your brand out there.
Yeah, and I would also say sort of like adjusting your expectations of who an investor is or what that person looks like. I think depending on what stage you're in, like when I was raising my family and friends, which is kind of in quotes, because I include within that other types of funding that I was able to raise outside of just family and friends. But to a certain degree, it was my really relying on my community and understanding, like, if they believe that I can achieve this vision, they might invest a small amount, right? Like a small scale amount. So I think that that's one approach, but also if that's also an approach that requires certain advantages and certain privileges, right? And that was even a hardship I faced. I was just going through the motions because I knew these were the expectations. I have to check this off my list before I can speak to another type of investor. And so how am I going to accomplish this? Knowing that I don't come from a background that is wealthy or privileged, right? And so it was really turning to like my peers who I've met along my career. These weren't even people who were working in the fashion industry. These were friends who were doctors or who, considered themselves to be high net worth individuals who were willing to take a small piece of their wealth and invest early on to be a part of a greater experience, right? So it's also like appealing to, I think, even emotionally to certain types of investors, especially at that level. Like they want to see you succeed. They want to be one of your early customers. They want to be a part of the community. And so I think that that's something that's important to remember before, going after some of these loftier and more ambitious goals. And I think that's why some of these sort of milestones exist, right? It's like, if you can achieve this the smaller scale goal, then perhaps you are prepared to do a bigger raise, right? Or receive a larger investment. But I think generally also just building relationships more than anything is really important, because you can't approach like a high net worth individual who you don't know and ask them for funding in a particular kind of way. Like maybe sometimes, but I would say generally, like you want to do it, I think, respectfully. You want to know who they are, why they will add value to your business, what in particular, if they have something that they really want to see accomplished, do you even meet that standard, right? So going back to what I think Lorraine said and Christopher said, in my own experience, I also experienced those exact things, right? And I think it's really important to keep that in mind as you just continue to grow.
I would say, I think, as I said, I'm really thinking about what, before you get to the VC stage, that's in terms of like, how do you begin to source those opportunities? I still believe that VC funding is really through like who you know, and there are like organizations and lists and things that you can apply to, but the way that the conversations has changed for me, it's certainly, I think 5 years ago, if I tried to talk to a VC, they would have laughed at me, right? So I think things like pitch competitions, right? Like there's sometimes it's $5,000, sometimes it's $10,000. Grants across the spectrum. I literally hello Alice. If you don't know that organization, you should definitely be following them and getting their newsletter. New Voices Family is another one that you should be getting their newsletter, because they have a lot of opportunities for both grants and pitches attached to it. Sort of that comes through your inbox, and really applying for everything. But I still believe that, at a particular stage, it literally is about relationships still, unfortunately. And I think that's when sort of really building solid communities, like getting out there and networking and getting to know people. I still think fundamentally that is still the way the game is played. But
Thank you. I think that feedback is really helpful. And I do know there is a lot of curiosity around who are these investors and VCs and angel investors. So we actually do have a list that will be sent to all of you after the webinar. So please keep an eye out for that. But we also encourage you to do your own due diligence and see, is this the right investor for you? What stage of your business at? All the feedback that our speakers have suggested before you approach them. The next question is for Busayo. How do you go about finding a mentor when you're working in the business full time, running the business and the creative? I find myself with little time to build those relationships, but I'm looking for investors via that route.
Okay, that's a fantastic question. So this is, and you're not going to like my answer, because I had 2 jobs. I made a decision when I was at a point where I was running Busayo full time. I ran out of money, and then I realized that I had to get a job to continue Busayo and the business. My mother had worked 2 jobs for a long time when we first came to this country. And so in my head, I just literally was like, I'm going to have 2 jobs. So I'm going to go to my office at 5:30. I leave, no emotional energy dedicated to that. And then I come home and I work on Busayo. And in terms of mentorship, so for example, right now I have 3 mentors, currently, that I'm talking to on a regular basis. One is from Raise Fashion, Hillary. I talk to her every week, Fridays. Adam, who's from another program called Unlock Your Potential, which is a program for minority women who are looking for mentorship, by a woman named Sophia Chang. Again, I found that on Instagram. I applied, and Adam Newhouse is my mentor for that. And him, I just check in when I need something. And so it's interesting to me, because I always think about the mentorship relationship too as a sort of a back and forth. As much as they give to me, I also try to give to them. I don't have a great answer for the person. It is really, really difficult. But I think for me, when I made the psychological shift that I wanted Busayo, I needed it to succeed, because my day job was not fulfilling me emotionally and mentally, right? This was my passion. This is something I wanted to do. And once I made the shift that I was going to have 2 jobs, right? Like the minute I'm going to work for somebody else, and then I'm going to work for me. And in terms of finding mentors, literally, I think if you read an article, you see something, for example, Mary Geller, this is a book, Mary Geller, The Fashion Designer's Survival Guide, amazing book. She's someone that ended up becoming a customer. We DM back and forth. Like, so there's ways in which you can develop relationships with people. If you see an article that you think that somebody, is quoted in, you can write them and say, oh my God, great quote in this article. I think it was great. And just begin to develop an organic relationship. But honestly, I'm a big fan of the programs. I apply for everything. And to be honest with you, it has made such significant relationship change in my business. And in terms of time, you'll find it. I know it's not a great answer, but you will.
Busayo, there's also a lot of questions about all these accelerators grants that you've referenced during the conversation. So we'll make sure to send you a list. We'll pick Busayo's brain a bit and send you some of her suggestions. And it sounds like beyond, there are many more to consider or find.
Yeah, I'll
Research.
I'll put everything in an email to you, and then you can add it to the list so that everybody can see it.
Thank you, Busayo. I think we might have time for one last question. We'll try and get it in quick, and maybe Christopher or Lorraine, you could answer it. How do I prove that my business is financially stable beyond sales? What kind of risks are considered impactful in terms of attracting larger investment pools?
Christopher, do you want to go first?
Yeah, I would say, obviously revenue growth, right? I think as we think about revenue as an absolute number, but growth rate is also important, right? Thinking about the slope of that curve, right? How quickly are you growing, or how slowly are you growing, I think is an important concept, right? And I think as a metric, it's important, particularly for high growth companies, to maintain high growth, right? I think that is, particularly for fiduciary investors who have a 5, 7, 10-year fund turnaround, they need to return capital, right? So you need to maintain, let's say, 100% or 80% year over year growth rate to get to wherever you need to be, right? If you're starting at 10 million and you need to end up at 100 million, and you only have 5 years to do it, there's really only one line that connects those two dots on that graph. So I think those growth rates are important. I think another aspect that I think, particularly we talk about bias in fashion, bias against fashion. I think fashion and retail tend to be capital intensive for the most part. And they're really not the highest margin businesses when you compare them to, let's say, tech only or digital only businesses, right? So I would be mindful as you think about capital expenditure, inventory efficiency. Those things start to hurt more and more when the numbers get bigger and bigger, right? It becomes much, much harder to scale or to carry the weight of large CapEx as a $200 million business when you're a $2 million business. And so I think those capital expenditures and, again, marketing efficiency, if they don't scale appropriately, you're like, okay, it works when we're spending $20 on Instagram, but does it work when you're spending $20,000 on Instagram or $200,000 on Instagram? Some of those curves start to flatten out.
Yeah, I totally agree. I will just also add that what is really important to show the viability and economic reality of a fashion business to an investor is the margin. So sales growth are really important, but when it comes to production costs, distribution costs, marketing costs, and then what's come out of it in terms of operational margin. Some brands, for example, wants to position themselves on the luxury segments and have very high production costs using production units in Italy, for example. I will take just a basic example, but it's not sustainable because until you get to a certain level of revenue, you cannot sustain and absorb those costs. So it's also a question of the revenues growth, but also the composition and breakdown of all the different operational costs and the margin. And as an entrepreneur, a creative entrepreneur needs to think about two metrics: sales growth, as Christopher was saying, and operational margin. The two works hand in hand because the investor will look at it and they will be the basis of the valuation. Because in the end, a valuation is a multiple of sales and a multiple of the EBITDA or the operational margin.
Well, as Felita mentioned, we are hosting our next webinar on November 30th. So there's a bit of time to rewatch videos. There's some more videos we're going to send you and to do some of your own research. Felida will obviously be leading that conversation again, and Ibarra and Busayo will be joining that with several new experts who we're very excited to introduce you to. But thank you all so much for joining us today. To Felida, to Christopher, Ibarra, Busayo, and Laureen, we are so grateful for your insights and your generosity in sharing your experiences. And we hope we all see you again in a month. So everyone, take care.
Thank
you very
you.
Thank
Thank you so much.
Thank you so much for the pleasure.